Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday, the 14th of March, 2023, and it's now approximately 7 p.m. in the evening GMT, and we've received the CPI report for the United States just a short time ago. And in this video, we're going to comment on it and look at the market reaction. We said Tuesday will be a crucial day, and it may very well prove to be the case. Okay, this is going to be a short video because we just want to get to the point. We mentioned on the weekend that Tuesday and Wednesday would be important days for this week because on Tuesday we have the CPI and on Wednesday we have retail sales. Now we've put a link to our video from the weekend in the description box below. So as you can see on the screen for February, we have the consumer price index for Feb coming in at 0.4%, exactly as forecast. And this compares with 0.5% in January. So you'd think good news, inflation's coming down. And if we look at the CPI year over year, yes, it does look like it's coming down, but it is as the markets are expecting. The core CPI, however, have actually gone up slightly, and that is a little worrying. Although once again, year over year, it's as was expected and marginally down on the previous year. Consumer prices rose 0.4% in February, and the annual rate of inflation slowed again, potentially giving the Federal Reserve leeway to approve a smaller increase in interest rates next week. Now that's the 22nd of March, as it gauges the fallout from the failure of Silicon Valley Bank. Economists polled by the Wall Street Journal had forecast a 0.4% advance in the CPI index last month. Prices had risen 0.5% in January, revised government figures show. The annual rate of inflation, meanwhile, slowed to 6% from 6.4%. That's the lowest since 2021 September. The so-called core rate of inflation, which omits food and energy, rose a sharper 0.5%. Wall Street had forecast 0.4%. The Fed views the core rate as a more accurate predictor of future inflation trends. Yesterday, we saw gold prices rocket. Now, when I say rocket, within reasonable distance, it actually peaked at $1,914. However, today, after these CPI figures, we're actually seeing gold go down slightly. Silver yesterday, very similar case. It actually did extremely well, and we were beginning to worry that it was going outside our predictive range that we forecast on the weekend. It did go as high as $21.98. However, it's fallen back slightly now to $21.89. Stocks have risen today because they're now expecting interest rates not to rise to such a large extent. There was the serious prospect of them going up at 0.5%. We personally think it should. However, with the CPI figures, and if they're backed up by the retail figures tomorrow, then we may very well see only a 0.25% rise next week. Cryptocurrencies have been on a tear the last 2 days, with Bitcoin rising $3,000 essentially, and is up 13% on the last 7 days. Good news for oil prices in that they have fallen, and we have WTI crude at $71.21, down $3.50, and Brent crude $77.30, down $3.47. The dollar index did fall, but not quite as much as many were perhaps thinking it might, and that's down 0.05 points. What's going to happen the rest of the week? Let's wait for the retail sales tomorrow. Don't get too carried away. The Fed is going to raise rates next week. That we're absolutely certain. The issue is it going to be a 0.25% or is it going to be 0.5%? What will happen to gold and silver prices then? Well, they've had a bit of a leap. We're not totally convinced they're going to skyrocket further from here. Not at this stage. However, there might be a little bit more mileage for both of them, but we're still holding to our weekend forecast. Thank you so much for listening. Please give this video a thumbs up, subscribe, press the bell sign, and we look forward to events occurring during the course of this week, and if anything exciting does happen, we'll publish another video. Thank you for listening. Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.